Hey guys, so the size of India's eyewear market is roughly $10 billion and LensKart is about to come with its IPO, which is priced at $8.5 billion. So is this a bubble? 100% yes. Should you as an investor put money? Zero. Zero but a sannata. Okay, so nothing needs to be put. Why? Because it makes no sense. Now, I'm not making this video to crib about like LensKart's IPO. On this video, I'm going to teach you something interesting, which has to do with corporate finance. How exactly is it that companies raise their valuation? How are these valuations justified? How this bubble is created? How this bubble pops? Because once this bubble pops, what's going to happen is very dramatic. So I'm going to give you an understanding of finance behind all this game that is being played, right? Now, my background is in finance. I have been investing crazy ton of my own money for years now, right? You can see, check my public performance, how I have been doing on my funds, etc., etc. All the links are in the description comment box. You can go yourself and check it, verify it, whether I am a profitable investor or not, okay? So I'm speaking with experience. I run a fund now. My job is professional money management. I do have significant amount of capital across different types of market, public markets, private markets, startups. So I put money across multiple markets. So I'll give you like a first-hand view on these things in very simple language, because retail investors are taken for a ride, right? So if you are a smart retail investor, it's important for you to understand these complicated points. I'll do my level best. Even if you're a class 10 student, you will understand everything that I'm saying. I'll speak in a very informal manner. Okay, so point one, let's study what has happened to different high ticket IPOs that have been launched. Very good brands, lot of support, lot of fanfare. So first IPO that let's speak about is Paytm. So Paytm was launched at roughly 1950, right? This was 2021 price. Till date, it has not recovered. People cry about Bitcoin and this, that stuff, but by Bitcoin, right? And since 2021, it has gone up 300%, right? Was there variability? Yes, there was. But look at Paytm, right? I mean, it was here. Then it corrected by whatever, like 70-80% and fell till here. And even till now, it has not even recovered its previous price. You will say that, hey, this is an exception. Maybe Paytm is just one of the many companies. What about like some other IPOs? Okay, so let's look at like Nykaa, right? So Nykaa again was launched with a lot of fanfare, right? And here is Nykaa, right? So this was the top, and this was again back in 2021, and then again right now it has not even recovered its previous high. In fact, it's like half of it. Okay, now what about Mamaearth? Now again, important shark, right? So here is Mamaearth, right? It got launched somewhere here. And since then, it has only gone down, right? It gave a run up, then it crashed very badly. And, long story short, people who started putting money in like 2021, 2022 phase for IPOs, majority of the IPOs have kind of failed. But an important question to ask is that for whom have they failed, right? Have they failed for retail investors, or have they failed for initial set of investors? Now, this is where a little bit of understanding of angel investing and corporate finance comes into the picture. And you need to understand the story of how a bubble is built. So let me use very simple logic example here. And let me work with the example of my company. Okay, so my company's name is Wisdom Hatch. Okay, so Wisdom Hatch is right now a private company, right? And I'll call it Wisdom Hatch. The size of this company is this, right? So we'll not put any numbers. Let's say that I do like maybe 10 crores of business a year. This is like my revenues. My profits are, let's say, 5 crores, right? So this is my revenue. This is my profit. But what is the PE multiple that I'm getting, right? Now, what is this concept of PE multiple? Because you will keep on hearing about this PE multiple over and over again. So I just wanted to take maybe like a minute to explain you this PE wala concept and why is this such an important point, okay? So I'll dumb down the example, but hopefully you will understand what PE means. Now see, when you go and do a job, right? So every month you get a salary. And let's say that your salary is 1 lakh rupee per month. Now, if I ask you, or if some random person asks you that, hey, what is your PE multiple? The PE multiple is 1 for you. Now, why is PE multiple 1? Because your valuation is what? Your valuation is nothing. It's like 1 lakh rupee that you're getting, okay? But for a company, it doesn't work that way. Because many companies, they get valued at a different PE multiple, right? For example, some companies have a PE multiple of 200, some companies have a PE multiple of 100, some companies have a PE multiple of 10, okay? And this makes a huge difference. Because in the previous example that I gave you, the job example, your PE multiple was 1, that you're not getting any 200x magnification. or 100x magnification on your valuation, or a 10x magnification of your valuation. So this concept of magnification is what valuation means. Okay. So for example, now if I go back to my example that I was running, that I run a company called as Wisdom Hatch, right? Right now it is a private company. I have no interest in selling even one stock to anyone. So I have not put any PE multiple on it. Now it might appear that, hey, my earnings are 10 crores, my profits are 5 crores. And if someone was to do a valuation of this company, it's very difficult to do because I have not went and raised a round for this company. I have not brought in any external investors. But let's say that, you know what, my goal is to IPO. Then what would I do? I will start a fundraising round. I'll go to Shark Tank and I will make a pitch like this, that, okay, hey, my company's revenues are 10 crores and profits are 5 crores. Then the sharks will ask me that, hey, okay, how are you valuing your company? What is the PE multiple that you're assigning? And then they will run their own thesis and will assign me a PE multiple. And that becomes the valuation of the company. So many a times you will meet founders who are running company's valuation might be like 1000 crore, but unke khud ke paise, right, in the bank would not be even 5 crores. Okay, so this is how it goes. So do not get impressed by the valuation of the company. Now this becomes a completely opposite story when the company IPOs. So let me just take you through the journey of IPOing. That will make more sense. So let me put a little bit more context here. So the way the IPO journey takes place is this, right? And we can understand it on a scale. Okay. So when the company starts, it's very small. The size of the company is only this much, or the valuation of the company is only this much. Then they raise a round. It is called as maybe like Series A round. Then they do Series B, right? Series B. Then they do Series C. And then they keep on raising. And at one time, the company from being a private company becomes a public company. Now, what is the meaning of public company or publicly listed company? It means कि यार IPO हो चुका है. Now you can go and buy these stocks as a normal retail investors via Zerodha, Grow, or whatever platforms you are using. Okay. Now along the way, Series A, B, C, the valuation of the company typically keeps going up. कभी कभी वो कम भी होती है because you know the founders or the early investors, whoever is investing here or here, they will say that, you know what, okay, you have pumped up too much. We are not getting the buyers in the next round. For example, whoever the investor was in Series A, if this bubble or this, you know, this valuation appears too big, what is the problem that they will face in the next round, in round B? They'll say, okay, no one is buying it because this valuation of the company has been made so high. So no one will buy it. So this becomes a problem. So sometimes the valuation expands and sometimes the valuation shrinks. Okay. So this is like the way the valuations work. And eventually what ends up happening, or the goal of this entire fundraising, is what? It's IPOing, that you take the company public. Now what happens? What interesting thing happens when you take the company public? Well, retail investors get in. Now who are retail investors? Small ticket investors who want to, like, you know, go and buy like 500 rupees of like whatever Nykaa stock or whatever they want to do. They can go and do it. So unko maza aa jata hai ki acha, you know what, listing gains ban gaye and that stuff. So this is how the entire nomenclature works. Now, let me just take you through an actual example of how this has played out, who the early investors were, and who is it that actually made money in Paytm versus lost money in Paytm. So again, go back to this chart that I was referring to at the start of the video, and you will see that retail investors come when? They come post IPO. So they come post IPO, they have lost money, they have not made any money. But did everyone lose money when Paytm was started as a company? The short answer is an absolute no. And okay, so here is the chart for Paytm early investors, and there was a company called as Safe Ventures and Elevation Capital. They acquired shares of Paytm at 15.4 rupees. Okay. And their estimated exit value was 400 million. And the returns that they made was 140x, 140 times. Okay. Same Elevation Capital, they would have come in round B or round C or whatever. Then they made a 28x. Then Alibaba made like 3.7x. Ant Financials made like 1.2x. SoftBank made like 1.2x. So all these guys made crazy money. Who lost money? Well, retail investors lost money big time. Okay, and Paytm is not just an example. Now, LensKart is trying to do something similar. So, for example, if I take you through the journey of LensKart, you can see, and this is a website where you can go and check like who is putting money, how much, in which company, and who are the investors. So you'll see that if you study the entire funding and investment rounds for LensKart, you will see that in 2000 And 11, LensKart raised its first round. This was Series A. This was at 4.05 million. Okay. And what is the post-money valuation? So post-money valuation was 8.94 million. So this was the size of the company in 2011. Okay. And then वो होता चला गया. Then in 2021, you will see that this was raised as a 13x revenue multiple. इसको मैं बताता हूँ उसका मतलब क्या है, right, in a minute. But since this is the data available, I'll just help you understand. And what was the size of the company? It was $2.36 billion. Okay. Now let me take you to the chart of LensKart that as to what they are trying to do. So for example, here are some of the IPO years and price to sales ratio at IPO. For example, for companies like Nykaa, they launched their IPO at 21 times sales. Now sales का मतलब क्या होता है? So if LensKart is doing 100 crores of sales, what they are doing is that they are multiplying this by 10 and this becomes the valuation of the company, right? So this is how they are justifying it. Now Piyush Bansal was cross-questioned in an interview that, you know what, boss, your company is coming out at a PE multiple, which is slightly different, right? So PE multiple is based on earnings, which is the profit, not sales. So the anchor asked that, hey, your PE multiple is close to like 200 plus. And even if you triple your profits, then also it remains at 70 PE for an eyewear company, right? So how is this justifiable? So Piyush Bansal, dekho yaar, my work is to do dhanda, right? And my viewpoint is to do good for my customers. I don't understand how this valuations game happened. That is for merchant bankers. Now merchant bankers are new term. I'll explain it to you. But see, he himself was washing away his hands कि यार मेरे को नहीं पता valuation का आप देख लो. Okay, so this is what he was saying, and this was where the fiasco happened, and this is the reason why, like, you know, people caught up that, you know, okay, कुछ गड़बड़ है valuations में, and now they will look more deeply into it. So this was poor management from the company side when it comes to launching this. Someone should have coached him right on that. So I don't know why he said that, but honestly, if you actually take a look at Nykaa, Paytm, तो 49 sales पे आया था, Zomato 30x sales पे आया था. Long story short, it's not as if that LensKart from a sales point of view has said like something weird, okay? So their valuation according to them kind of makes sense. But I just wanted to tell you one very important point based on the funding rounds and where we are at on LensKart's valuation. So here, they are doing 10x multiple and the total valuation of the company comes out to be 8.2 or 8.3 billion dollars, okay? And this is being done at 10x of sales. Now, earlier on, I showed you that at one point in time, LensKart was valued at 13x ka multiple. But at that point in time, the size of LensKart was this much. Here, the size of LensKart has gone 4x, 5x or even more than that, right? So I'll just quickly double check how much was that. So here it was at 2.3. So almost at like 4x the size, they have hardly reduced this, okay? So this is a very big problem, so to say. Now the way they are justifying is, dekho yaar, hamari tech company and all that. So this is what they are trying to do, because for an eye brand, right? So eyewear brand, right? You cannot have like crazy multiples, okay? Or you cannot have a crazy PE ratio, right? So PE ratio for LensKart comes out to be 200. Now you might ask that, okay, one time you're saying like price to sales and other time you're saying PE. See, both the things are valuation metrics. For example, if you want to figure out that whether you are fat or not, so you look at your weight. That's one way of measuring whether you're fat or not. And second is BMI, right? So BMI index, you might measure that. अब DEXA scan होने लगा है दुनिया भर की चीजें. So similarly, like when the valuation of a company is built, you look at price to sales, you look at PE ratio, you look at relative benchmarking, etc., etc. So on every benchmark, right now, it looks like that LensKart is expensive. LensKart defense was that, see, you know what, ये सारी जो कंपनियां हैं, Nykaa हो गया, Paytm हो गया, Zomato हो गया, 40, 50, you know, price to sales पे आए थे, हम तो यार फिर भी 10x पे ही आ रहे हैं. So हमारे साथ इतना दुखियारापन क्यों, right? So this is what they are saying, okay? So I hope that you understood the story. Very quick 2 points. Number one, that is LensKart overvalued to a normal retail investors? Yes, because at retail level it's overvalued, okay? Number 2 point is that, is it like, what is their defense? Well, their defense is कि यार देखो बाकी की कंपनियां भी तो निकली थी, but go and study the fate of all these 3-4 companies like Nykaa, Paytm, Zomato, right? Initially उस Zomato में बहुत dip आया था and Zomato was able to expand, okay? So now let me help you understand the second point, that okay, fine, the valuation of the company is huge now, right? LensKart हो गया, Nykaa हो गया, Paytm हो गया and all that stuff. That Piyush Bansal also said that okay, you know what, investors decide what the valuation is, it's not up to me, or merchant bankers decide what the valuation is. It's not up to me. So are they that naive, right? Or what happens? Like, how is it that this entire game is played? Okay, so now let me help you understand. And again, take a look at this image. This is a perfect capturing of what's actually happening. See, so there are three types of investors, right, when it comes to IPOs. One is early investors in a way. Second are QIIs or qualified institutional investors. And third are retail. So I'm doing like a very rough categorization. See, early investors over SAFE wale log and your Maya Soshi-san and all these VC, guys, right? So these are early investors. They are anyways making money. Their job is what? Well, their job is ki dekho yaar, we invested at a very small size. We want it to go like really high when QIIs come in or retail comes in, right? So this happens post IPO in a way, okay? So this is like one category of investor. They want to sell, right? They want to sell, and this includes founders also. Now then, who are QIIs and why QIIs are important? So QIIs are your SBI, your LIC, your XYZ, HDFC, AMC fund, Falana, Deemka fund and all that stuff, okay? Now almost 60% of IPO buying which is happening in India is happening via these guys, right? And here is a list of top QIIs in India. You guys can stop the video, watch it, just read through the list. And these guys are like major buyers of IPOs. Now, for example, like I'm just making up an example. So let's look at any fund, right? So let's call it HDMC XYZ fund, right? XYZ fund. Now these guys, let's say they are running 1,000 crore fund. So for them, putting 10 crores is how much percentage of their portfolio? Well, it's 1%. Okay, so now they will put this 1% money in these type of companies, Mamaearth, Paytm, this, that stuff. And मान लो ये डूब गई कंपनियां, okay, so खत्म, right? Now investors will grab their throat. They'll say, यार आपने पैसे डुबा दिए, right, इस company में, right? So what will they see? Other 99% for me is doing well. So why are you bothering about this 1%? So this is a game, right? Now even QIIs know, right, that okay, these companies are expensive, okay, but होता क्या है, सांठ गांठ चलती है, right? So यहाँ पे, right, these guys get together in a way, right? And I'm not blaming anyone, I'm speculating, okay? So I'm speculating. So these guys will सांठ गांठ चलती है, right? So these will go to QIIs, खरीद लो हमारा stock. This is called as book building process because these guys have to sell and they need a counter buyer at the other end. So someone has to buy. Now QIIs will buy it. They might run a stock a little bit. So retail then jumps in, right? So retail investors are small ticket investors like you and me, right? Dal denge like 10-15,000 and all that stuff. So these are retail guys, and roughly 30-35% of buying is happening via retail. Now in a way, right? I mean, if you actually flip the question that hey, how do QIIs get the money to do this game, right? To buy even this 1%? The answer is SIP, bros. Okay, so SIPs आप चलाते रहते हो, right? कि हाँ ले लो, कुछ नहीं फर्क पड़ता, long term, right? So you will just keep on giving money after money every month, and everyone is like saying good things only. Okay, long term growth story, this story, that story, and you will keep on giving कि क्या ही फर्क पड़ता है, right? बन जाता है return and all that stuff, and कुछ नहीं होता तो last अच्छा let's just go like 20 years back into the history and look at कि आजादी के समय से अगर SIP चलाई होती then how much returns we would have made. So then they will give you some number that okay आपका क्या अगर इतना आ जाता है इतने करोड़ बन जाते. See guys, I mean that's very dumb actually, right? I mean you have to look at the valuation of anything in which you are investing. Fine, continue to do SIP, but look at where the market is heading, right? You must learn basics of finance at least. If you're just clueless, just simply buy gold, simply buy land, डन. ओके, उसका कुछ नहीं करना आपको, ना मेरा वीडियो देखना, ना कुछ करना, सब छोड़ दो, अनसब्सक्राइब कर दो सारे चैनल है, मेरा भी चैनल अनसब्सक्राइब कर दो, इट डजंट मैटर. ओके, बट लॉन्ग स्टोरी शॉर्ट, इफ यू आर नॉट इंटरेस्टेड इन लर्निंग एनीथिंग अबाउट वैल्यूएशन बट स्टिल यू कंसिडर कि हाँ SIP सही है वाली चीज, सो या आई मीन अ लॉट ऑफ योर SIP मनी इज going for this game. Okay, so this has become a structure because you know whatever HDMC XYZ fund is not the only fund in the market. There are thousands such fund, and everyone like 1% अपना लगाते चले जाएंगे and keep on pumping ridiculous stocks. Okay, so this is the game. Now you will say that okay, why is this game being played? Because ये होता क्या है कि for example if you look at who is the funder of Paytm, Nykaa, major companies like so you would say that a lot of foreign players actually fund this, right? Maya Soshi-san, right, who is the founder of SoftBank. They funded a lot of startups in the phase 2015 to 2019-2020. उसके बाद IPO शुरू हुए. Now these guys have to have a positive experience. Now what is the meaning of positive experience? Well, they should be able to like buy here, and when the company becomes this much, sell it, make their money and take it away, right? So this is the FII game, and this is the reason why they come to the Indian market. Now, if DIIs or these QIBs, right, qualified institutional investors, are not buying this, okay, when foreigners are selling, then what will happen? Well, these guys will stop putting money in the Indian market. So yes, in order for foreign flow to come into India, for that foreign technology flow to come into India, because one of the key theses of why startup investing should happen in India via foreign companies was the scope of technology transfer. For example, if SoftBank is making an investment in Paytm, then the assumption is that Indian market will benefit because Paytm will be able to leverage some of SoftBank contact, maybe with like Meta or whatever, and get a hold of some key piece of technology, okay, or will improve in that technology stack that it currently builds. But ho kya raha hai ki this entire FII market, right, at least in that phase, was all about playing this game that give a positive experience to foreign buyers कि उन्होंने यहाँ पे invest किया, यहाँ पे निकाल दिया, and zero technology transfer or whatever. And this entire thing कि SBI mutual fund है जैसे SBI mutual fund, right? Now, who do you think controls the purse of SBI mutual fund? Like, you guys are smart enough, you guys make an assumption, whoever controls it, and they are the one playing like that 1% game, right? So exactly this is how this picture plays out. This is exactly what's going to happen on LensKart also. At the end, who is left holding the bag? Well, it is the retail investor that is left holding the bag. So natural question comes that in summary, what is it that you will try to tell us, right? If we are retail investors, should we not invest? Should we invest? How we should think about it? So I will leave you with 3 points, okay? Number one, valuations are supreme. There is zero benefit in terms of going and speculating in companies like LensKart, Mamaearth, all this nonsense, right? Why? Because you can actually, if your goal is to get like 20%, 30% returns CAGR in a way, right? And fast growth companies में करना है, right? Buy like better quality companies, you know? आप small cap, mid cap देख लो जो आपको जम रहा हो, right? I mean, or otherwise like invest in Bitcoin or something, right? That's much better, right? At least Bitcoin डूबा तो नहीं है, right? So from that angle, if you're taking that level of risk, it should be commensurate with the returns that you're making, right? So this is point one. Please study valuations, absolutely critical. If the P ratio does not make sense, then yeah, it just doesn't make any sense, right? Number 2 point, that see, this bubble is going to end at some point and you need to have a forward-looking approach regarding the entire market. People have been very vocal about the fact that AI bubble is going to burst, US economy is going to collapse, US dollar is going to collapse, Trump's face will become from orange to dark orange or whatever. See guys, okay, if AI bubble burst, okay, fine, right? I mean, what do you think is going to happen to like, you know, top 10 tech companies in the world, right? 8 are in the US. वो तो डब्बा हो जाएंगी, right? And if that happens, do you realize that how much mayhem there will be in the world, right? Not just in the US, in the entire world, it would be huge, right? So there is a very important contingency risk there. But what happens if India's IPO market bursts? Okay, what do you think is going to happen? Well, the only thing that is going to happen, or critical thing, is that will be a hyper local event. Okay, उसमें सिर्फ Indian market को फर्क पड़ता है और किसी को फर्क नहीं पड़ता. That's the bottom line. This market is only important to India, no one else in the world. Now again, let me set some context. See, when it comes to like Nvidia, Amazon, it's not just American investors. It's like European investors. You have like South American investors. You have Chinese investors who are putting big money in equity, in US equities, Indian investors and all that. But when it comes to this IPO investing, okay, especially like जब ये tech companies के IPO जाते हैं, who is the one holding the bag? It's only Indian retail investors that is holding the bag, okay, at that point in time. So this is a hyper local event. This bubble bursting has a much higher likelihood compared to AI bubble bursting, okay? For context, now again, some of you will get pissed off कि नहीं ऐसे कैसे बोल रहे हो. So see, I mean, Meta recently, like last week, it announced the results and they plan on spending more than $100 billion, right? $100 billion. Now, just for context, India's central government budget on scientific spending and research is close to $8 billion. That's it, 8 billion. Okay. And Meta ke liye company is going to spend $100 billion plus in 2026 on what? On like Ladla Lodna Yojana and all. No, like they are actually going to spend money on like, you know, useful productive things. So that bubble is very low probability of bursting. They are actually spending money productively. If you study the capital expenditure of Meta, they have been very good allocators of capital for the last 20 years. Mark Zuckerberg, you can call him 100 different things, but he's a smart tech guy who understands tech, okay? The daily average user for Meta is 3.2 billion people. Almost like 40% of Earth uses Meta products on a daily basis. वो बबल फटने की ज्यादा वो है कि यार लेंसकार्ट जैसी कंपनी डूब जाए उसकी ज्यादा प्रोबेबिलिटी. ओके, सो एनीवेज आई एम digressing, but the important message that I'm trying to tell you is that see, this hyper local bubble has a higher odds of bursting. If that bursts, then Indian market will become primarily domestic market, and that is a little bit of a complication. So please manage your portfolios accordingly. Third key thing, that do not trust anyone blindly, including me, right? Please fact check whatever I'm saying. Same थियरी अप्लाइज टू लाइक म्यूचुअल फंड इन्वेस्टर. भाई वो अपने आप को एक्सपर्ट बोलते रहते हैं, हमें एक्सपर्ट. भाई आपने 1% रिटर्न आप जनरेट करते हो, एक, ओके, लिटरली 1% यू आर जनरेटिंग फॉर द लास्ट 1 year. Anyone could have beaten you, that's a fact, right? If you look at dollar returns, it's less than 1% in the last 1 year. It's shameful. Okay, so that's what I'll simply tell you. And on top of that, they have audacity to charge like people expense ratio. This is just bullshit, right? That's what I'll simply tell you. Don't trust anyone. Just simply do your analysis wherever you feel is the best thing. Invest your money there, not a problem. If you don't invest, even that is not a problem. But just don't believe in like, some random things. Acha, you know what? Okay, if I just continue to run my SIP, I'll forever make money. Bhai, SIP in what? That's a natural question that you need to ask. If you're looking at a fund's constitution and they have a history of investing money in these propped up companies, do not give them money. So I hope that this was useful, informative. If yes, do press the like button and I'll see you soon.